Today I'm going to show you a bear flag on crude that I think will have a great move when it breaks. Watch today's video to trade this with me. Hi, this is Tim from TradingStrategyGuides.com. Before I get to the trade setup, I have a very special announcement. I've been trading a new strategy for the last 6 months or so, and it's given me some great results. The best results I've had in my 15 or so years of trading. So if you want to learn this strategy in next week's video, hit the like button and leave a comment below. If I get 100 likes and 10 comments, I'll show you the strategy. If not, I'll just assume there's no interest and I won't take the time to share it. Okay? Okay. Once again, we got a huge number of charts to look at this morning, including open trades, changes in prior setups, and blown setups. After those, we'll look at the crude bear flag and the trading maxim for today. Let's get it. Remember to click the subscribe button and hit that bell so you'll get notified anytime we do a new video. All right, let's look at some charts. The S&P 500 stop is set at 30.62, locking in 25.75 on our second half. Haven't moved it, getting a little bit of a pullback today. Hopefully we'll pull through that and we'll move up. I'll be moving the stop up once we get a higher high up here. Okay, the AMD chart has dropped below that triangle I was pointing out the other day, but it hasn't hit our stop at 35.40. It locks in 51. I'm looking for a higher high above this level to move the stop up again. The stop on the E-mini Dow Jones is still set at break even right here at 27,380. If we survive this little pullback right here, I'll move the stop up on a pop above this candle. Kohl's Corporation stop is currently at break even, 55.30. Again, looking for a higher high up here to move the stop up. As anticipated, Costco Wholesale closed back inside the triangle, which was right here on Friday. I shut down that trade for about a 1% loss, but we still have the nice decline in the volume and the volatility right here. So I moved this resistance line, which was right here. I moved it up here to 307.30. And we'll watch for a new break from that level. The descending triangle on Cineworld Group may be blown right here. I'll watch it and let you know what I'm going to do with it. Okay, let's take a look at this crude oil trade setup. This is the active pattern on crude oil that I've been watching for some time now. I even justified this pop-up right here because of the Saudi oil field attack, but now it's just consistently popping above the triangle right here for a few weeks. I think this 51 level down here is still significant, and price is likely to bounce when it gets down here, and I'll consider using this level for a future setup. But for today, I'm going to call this descending triangle a blown pattern and move on to this. Okay, this is just a little bit zoomed in chart, and now we're looking at the push up above the triangle, and it actually forms a really nice looking bear flag. Now, a bear flag consists of a downtrend coming down from the oil field attacks that happened right here, and then an upwardly moving parallel price channel, which is the actual bear flag. Volume is declining just a bit. I'd like to see just a little bit more volume decline here, but the volatility measured by the ATR is dropping nicely right in here. So here's the new plan for crude. We will sell a daily close below the bear flag. On the breaking candle, I want to see a volume bar reach up here to the volume average. If it doesn't quite reach the average but does reach 75% of the average volume, I'll take a half size position to reduce risk. You can calculate the percentage by taking the volume number here, dividing it by the volume average, and your result should be 0.75. If you don't get 0.75, stand aside on this trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So again, on the breaking candle, you look at the ATR, or average true range, which is the average length of the last 14 candles. You'll look at this number right here, multiply that by 1.5, and your stop will be that far above your entry. So if the candle breaks and closes down here, that'll be your entry. You'll measure 1.5 ATR above that for your stop loss, 1 ATR below that for your first target. If after entering the trade you get a close back up in the bear flag, take your loss right then and do not wait for it to hit the stop loss. Our intention for these trades is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, demonstrated by the fact that the candle closes back inside the pattern, then we want to shut the trade down without taking a full stop if possible. When price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I use 2 positions. The first position has a hard stop loss and a hard take profit at the appropriate prices. That's the position that will close when the first target is hit. The second position will have a hard stop loss and no take profit associated with it. That's the position we'll allow to run. I also only risk about 2% of my account on each trade. No single trade should make or break you. And that's today's setup on crude oil. I tell you this every time because I want to make sure that you remember this. I'm not trying to tell you what to do. I'm just trying to tell you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've developed a trade management plan that works better for you, please use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology, your own mind, to find the best strategies for your trading. And psychology, of course, in my opinion, is the most important part of trading. And the trading maxims are the way I handle my personal psychology. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline. Discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 44. You may encounter many defeats, but you must not be defeated. In fact, it may be necessary to encounter the defeats so you can know who you are, what you can rise from, and how you can still come out of it. And this is from Maya Angelou, who was an American poet, singer, memoirist, and civil rights activist. This is the kind of mindset we have to have as traders. We have to be willing to encounter defeat and rise above it and move on. We have to know who we are and what we can survive. Trading, just like all things in life, requires a lot of introspection. Remember our crude oil trade plan here. We're going to sell a daily close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't forget about Tim Black's Trading Picks. That's me. Sign up for my free Trading Picks email list so you don't miss any of them. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll be the first to see them. And the best thing about it, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or 2 on each one, and maybe some extra Q&A or training on Wednesdays. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. Don't forget to hit the thumbs up below and leave a comment if you want to hear about my new trading strategy. Remember, I need 100 likes and 10 comments. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I'll see you next time.